Good evening, all. Ira Epstein with your Monday evening financial markets update, and we're on December 1st, 2025, about 6:05 p.m. Central Time. In terms of news, we're going to get the Redbook retail sales for the week ending November 29th at 7:55, and then the API numbers will come out Tuesday afternoon at 3:30 p.m. In terms of market data, well, as you can see, you're still getting a correction in the stock indices. I am looking for this. I want the markets to pull back. Two of the biggest gainers of the seasonality, the Santa Claus rally, are December and January. So you want to see the markets pull back, especially early in December, to give you the buying opportunity to try to come into the markets on a break. And that's what I'm looking for. For those of you that get my weekly letter, you're going to see I put in tonight the percentages of gains that happen between December and January each month. And then in the summertime, the next biggest series of gains after that. As we take a look at the S&P on a weekly only close chart, you can see you're back up and challenging these highs. That's with 69.53.75. You're about 100 points from it, but not too back off. You can see how the market has been falling down here with lower highs, but when you put on the swing line, you have a lower low and a higher high. There is no trend on the swing line. That's very important. And if you take my charting course, you learn what those swing lines are, and they're super, super important. I teach them in detail, and remember, there's a third off during this week, the Cyber Week, so you can get these courses at a reasonable price for you. But in any case, you had an outside day to the downside. If you take out this high, be it tomorrow, which is Tuesday or Wednesday, then you got something to talk about that you might go higher, maybe towards the upper Bollinger Band right away. But if you don't do that in the next 48 hours, there are two trading sessions, the odds favor you might even be willing to pull back to 67.57. And because the market's overbought, if it gets away from that, that could set up the potential area for a buying condition. When we look at the Nasdaq, again, another overbought market. Any reading in the slow stochastics over 70 is overbought, and you most certainly have that in this market right now. When we step over to the Dow, you have a lower low, higher high, not in an overbought condition, but it's still not trending. Yes, the bias is up, and bias is measured by the relationship of the current price to the 18-day average of closes. And as you can see on this chart, what is taking place is the market is sitting here right now just over that 18-day average of closes of 47,086.72, but I need to get the pattern of higher lows and higher highs in place, and I'm not getting that at this point. And the same is true in the Russell. You have the lower low, higher high, and I think you're due for a pullback in an overbought market. In the DAX, you had a neat rally that came in from the lower Bollinger Band finally, popped back up over here on November 25th over everything, and it just kept itself into the move to the upside, as you can see, and it's finally back to the 18-day average. So it's acting very, very, very similar to what we're seeing in our stock indices, and it wouldn't surprise me that it starts fighting a battle here for direction to the upside. When we come to the 10-year notes, I'm not sure we should keep looking at the Indices, but since I have it on the chart and it's still current, I will. But I'm moving to the March now. Lower highs, lower lows into the support of the 18-day average, but not a buy. This is where the market could easily find support between here and these two moving averages. I wouldn't get overly bearish down here. And the 2-year note fell the same way. And again, I'm going to switch over to the March. I'll do that right after this so that I'm up to date with it. In the dollar index, we've got lower highs, lower lows breaking into, as you can see, the 200-day average right here and the Bollinger Band. That's a full-fledged signal, the way that I teach charting, that if you were short, that's where you're covering your short and you're running away from the market right now. That doesn't mean you're suddenly bullish, but it would be where you cover shorts. When I look at the euro currency, I see the higher lows, higher highs. The market is over the 18-day average. That part of the market is also bullish. Let's see if I can pull this over at all. I can a little bit right there. There we are. So the support zone to be a buyer is 115.92, let's call it. Your stop would have to be at 115.15. I think that's too much money to risk. So I wouldn't let that market slip back there and see how well and if a new chart pattern can develop against that 18-day average before doing anything. In the Japanese yen, the Bank of Japan continues to talk about raising interest rates. And as I told you, when you lost the bearish embedded reading, which happened right over here, I said the odds favor before you go under this low that you will get up to the 18-day average, and that's where the market will make a decision. Number two, every time the bank has done intervention, within days, the market tests the bank and drives the yen the other way. I haven't changed my opinion there. In Bitcoin is getting the heck beat out of it, but it's got to prove that it has legs to the downside. So it's very important that it get back under 81,085. If it doesn't, I can make an argument that between here and the Bollinger Band is where the market's going to try to find support. Why? Because you had a bearish embedded reading that you lost. So unless you take out this low, the odds still favor on this pullback that the market's going to try to make a run at the 18-day average of closes. As we come to the energy markets, while Steve Witkoff is going over to meet with Putin and all the gang in Russia, the simple fact is, what does he have to deal with? Unless Ukraine is willing to give up territory, which so far doesn't seem to be the case. That can change, but that doesn't seem to be what I'm reading. There's nothing really to negotiate. Putin's got the upper hand. He's got the better arms. He's captured their territory. They're not capturing his territory. And the question is, how far down this road does the U.S. want to go? It appears that Europe's willing to fund Ukraine, but I don't know what the president, our president, is willing to do. So we will find out. In any case, the near-term support, 63.12, it's void of a trend. You have a higher high and a lower low. I frankly don't see anything to do there. In WTI, the February, you have a higher high and lower low. I don't see a trend there. When I look at heating oil market, now I go to the Januaries here, higher high, lower low, and oversold. There's truly nothing to do there. And in that gas, I'm friendly longer term, but I don't see a trend trade. So in essence, when I go through everything that you and I have, I've not seen anything that I would tell to my clients, hey, rush in and do this or do that. And that's okay. They've done very well. And now we'll see what the markets want to offer. But here's an offering for you. 1/3 off if you wanted to try 1 month of the video or the Spider ETF. We also have combo offers that you can try. You can see 3 months of the futures video, 1/3 off of the Spider or the combo, the combination of the two there. And if you wanted to try my full futures, that's where I write twice daily updates and give you trading ideas. And then I can put out sometimes during the day special updates, whatever I want to do. Normally I do special reports, but in all honesty, I'm moving my home this week and moving out of state, and I don't have the time to get that done till I get settled in. That could be this week that I finish that up with any luck, and then next week can get back to more normal of what I'm doing. I'm dying to do some special updates. My courses, instead of $250 for the full charting course, 1/3 off, $168. The enhanced Bollinger course, one of my favorites. Instead of $120, $80, and the outside day course. If you don't see this course, you're really missing it because you get outside days all the time. How do you trade with them? Again, 1/3 off. Simply go to iraepstein.com. All you need to do is give it a click over there and you can see it. If you come up here, you can click, there'll be an icon, and over here on YouTube, you'll see it there as well. In any case, I'm Ira Epstein. You have yourself a great day, and thanks for looking at this.